Thank you for joining us again this week. I'm Dr. Tom Wales, Deputy Director of Analysis at Oxford Analytica, and I'm joined by Dr. Megha Kumar, who runs OA's Asia Pacific analytical practice. We're here to discuss trends in the global political economy, but Megha's focus is particularly India, so let's turn there. Megha, I think one of the common market tropes about India is that, well, the market has been quite schizophrenic in its feelings towards India over the last 6 months or so. Initially, it was this sort of not quite China in terms of appeal to external investors, but certainly the market was very bullish. And then there was this collapse in confidence a couple of months ago, a spectacular fall in the rupee, FDI outflows, and a general sense, particularly among Western investors, that India was really problematic.
Yeah.
Now we've had some stabilization. Where do you think the truth lies here?
Well, I think somewhere in between. I think there is some good cause for concern as far as the Indian economy is concerned, because we see some very key areas of weaknesses. One is return of inflation. We've seen that despite repeated monetary tightening last year, inflation hasn't really come down. In fact, the reverse has been true, where consumer price index has been rising over the last 3 months. The rising trade deficit is a major problem. That's partly because of the earlier rising and now still high oil price, and also because rising gold imports. At a time of acute global economic volatility, wealthier Indians are investing more and more in gold, and that is having a very negative impact on our current account. And the third issue, as you mentioned earlier, is the sliding of the rupee, which is bad for all kinds of reasons, because large corporates are exposed to dollar-denominated debt, and they will see their payments rise. And the other important issue that you hinted at right in the beginning is the slide in the rupee, which is problematic for all kinds of reasons, not least of which is that corporates have dollar-denominated debt, and with the sliding rupee, that will become difficult. Import costs will go up, especially of capital goods, and that will mean that there could be a feed-through inflation impact. So these are the three important reasons to be concerned about the Indian economy. But that said, the economy is still growing at about 6.5%. It's not as spectacular as it was in the mid-2000s and late 2000s, but nonetheless, at a time of global volatility and tepid global economic growth, 6.5% is still robust.
Now, another common theme that we hear from investors, particularly those that are skeptical about getting into business in India, is that India's democratic process is dysfunctional. You often hear this from investors who happen to be heavily invested in China, for instance, where it appears that the Politburo Standing Committee can just wave a magic wand and everything will be fine. That is, of course, completely wrong and a spectacular oversimplification. But nevertheless, there is this perception that government's dysfunctional, and in particular the reform and liberalization of certain industries. I'm thinking here specifically of retail. Just is stalled or not going forward. Do you think that's apposite or not?
Not really. I think because there is unfortunately not sufficient disaggregation of political paralysis and policy paralysis as far as India analysts are concerned. Because we clearly do see all kinds of problems in the two main national parties, the Congress and the BJP. And the fact that neither of the two have a clear leadership succession process in place is a major problem. So can we say with confidence that the Congress will have resolved its leadership problem well before the 2014 general election? No. And can we say the same about the BJP? Also no. It is also unlikely to have a clear consensus on a national leader. But therefore, does it follow that no big-ticket reform, such as multi-brand retail, will go through before the election? Also no. Because, especially in this context, what gets ignored very often is the power that state governments and regional politics has on shaping the nature of wholesale and retail trading reform in India. And it is quite possible that the more business-friendly states in India, such as Karnataka and Gujarat, will change their tune once their state elections are over. Gujarat is due to go to polls in 2012 and Karnataka in 2013. So it's quite possible that BJP leaders in these two states, should the two return to power, that is, change their tune and be willing to deviate from the national party line. So I wouldn't say that that there is a 0% chance that big ticket items will not go through. They may not go through because of all kinds of other constraints, but we cannot take it as a foregone conclusion.
Well, you heard it from Dr. Megha Kumar, who runs Oxford Analytica's Asia Pacific analytical practice. Investors may just be a little too bearish on India. I'm Tom Wales. Please join us again next week for another look at the global political economy.